If you have been running a business over the past few years and you have decided that it is time to let it go, that you are done with it, then you can't just stop operating it. You have to go through the procedure of actually dissolving that entity. By not closing it out the right way, you can cause a lot of problems in the future. In this video, I'm going to talk about how to legally dissolve your business. My name is Keisha Rodino. I am a business and real estate CPA and tax strategist. I teach you how to use the tax code to pay less in taxes, keep more of the money you make, and build wealth in your business and your investments. So if this is something that you're interested in, make sure you like this video and you subscribe. So let's get into it. When you have been operating a business and you get to the point to where you determine that you don't want to run it anymore, or it's not giving you the same satisfaction that you had before and you're ready to just shut it down, you have to go through the proper channels of doing so. You can't just stop operations and don't do anything else, because that is going to cause you problems later on down the line. The first thing you want to do is confirm that you are in good standing with the state that you have been operating that business in. When we say confirm you are in good standing, you want to check that you have submitted all reports that are due to them. If there are any payments or any fees that need to be paid to them, that they are paid and you have nothing outstanding, that any franchise reports or any other reports that needs to be reported to that state, ensure that all of that has been done before you attempt to dissolve. Because if everything has not been submitted to them in the proper way, they won't allow you to dissolve that entity. I know I had someone reach out to me and say, hey, I want to dissolve my entity. What do I need to do? When we started to complete the paperwork for dissolution and we checked to make sure that they were in good standing, come to find out they were not in good standing. In fact, the entity had been forfeited with the state the previous year because they had not filed all of the documents that needed to. The yearly franchise reports were outstanding, so the entity itself was forfeited. Before we were able to dissolve the entity or file the paperwork to dissolve the entity, we needed to get the entity back in good standing in order to file the paperwork for dissolution. So that's the first thing you want to make sure, that you are in good standing when it comes to operating that business in the state that you were operating in. The second thing you want to do is notify anyone that may have any interest in your business to let them know that you are going to be closing it down. So that means any customers you have, any clients, any vendors that you may work with, any creditors that you may have, reach out to them and let them know that you are going to be closing down and that you will no longer be operating. If any clients or customers do owe you any money, that they will pay you. You need to request any payment and get any money that may be due to you within that business. And on the flip side, if there are any vendors or any creditors that you have, you want to contact them, let them know that you're closing, and settle any debt that you have with them. Whether that means submitting any payments that you have, or it may mean that you have to come to some type of agreement to satisfy any debt owed to them. That should be done prior to dissolving your entity, because if you dissolve it, none of that is going to go away. In fact, it may enhance what can happen in the future by not letting them know you're closing and not coming to some type of agreement with what needs to happen now that you're closing. The third step is that you want to file any dissolution paperwork. And so once you determine you are in good standing, once you have contacted your clients or any creditors that you may have and taken care of everything from that aspect, you are now ready to file the dissolution paperwork. Now, in order to file that paperwork, there's forms that are specific to the state. It may be an article of dissolution form, or it may be a certificate of termination form. This needs to be filed with the Secretary of State. The Secretary of State is the entity that is going to actually dissolve the entity and will keep the documentation on file that you have legally dissolved. If you happen to operate your business in multiple states and you are considered to be a foreign entity of another state versus where you live at, you will also want to file those dissolution documents there as well too. You don't want to just dissolve in the state that you were formed in. You also want to file documents indicating that you are withdrawing that foreign classification with the other states that you have been operating in as well. The fourth step is filing the final tax return and a reporting document. When you file that final tax return, you will indicate on that filing that it is the final return. There's a box that says final return and you are going to check it. When you check that box, that lets the IRS know this is the final return that they are going to receive for this EIN, which means that they are not going to be looking for a tax filing for this EIN in future years. And if you had any employees, it also means that you want to file the final payroll tax return and you're going to issue any W-2 forms to employees that you have, as well as any 1099s that you may have to provide to any independent contractors. You will also want to close out that EIN with the IRS. When you close out that EIN, you're going to send a letter to the IRS indicating the name of the business, the EIN for the business, and the reason why you are closing the business down. That will let the IRS know that this EIN is no longer active. And so if any further documentation or any tax documents may come in with that EIN, it may or may not be valid because you are closing this business down and that you no longer wish to use that EIN. The fifth and final step in this process is distributing any assets that you may have remained. Once you filed all of your dissolution documents, you filed your final tax return, any remaining assets that you have on hand will have to be distributed. Now, if the business is a single member LLC, then single member owner is going to take the remaining assets. That means anything that may be in a bank account or if there's any property that's associated with it, that is going to belong to them. If it is a business that have multiple owners, any partners that are involved in it, once all debt is paid off, if there are any assets that are remaining, then they will be distributed to the partners. And the way that they are distributed depends on the operating agreement. You're going to go back to what was put in their operating agreement when the entity was formed to determine how any cash in the bank account, any property that is on hand, any equipment that may still be available, how that is going to be distributing amongst the owners and partners within that entity. Once all of this is done, you do want to keep track of the dissolution document, the final tax return, any bank statements that you may have, any business documents that pertain to debt, that pertain to assets. You want to keep all of that on hand because in the future, if anything arises from previous operations of the business, you want to have all of your information. I hope this has been helpful for you. Follow these steps when you are closing your business down. Do it the right way because you don't want anything to come back and haunt you down the line. Make sure you like this video and subscribe to my channel. And if there are any other topics that you are interested in and wish for me to talk about, leave it in the comments below. I would love to hear from you. I look forward to seeing you in the next video. Bye.